Hey guys, welcome to the Gold Rush. I wanted to come on today live and tell you guys about a couple things I've been looking at, kind of get a good feel of the macro story. There's so much going on right now in the markets, and there's so many things that we need to talk about. Basically from gold to the dollar to international stocks to copper, lumber. For me, I cover all markets. A lot of people have been reaching out to me lately about performing well this year and so on. And for me, it's just I'm a macro guy. I'm not stuck in any area. I do not consider myself a tech investor, even a commodity investor. Yes, I cover all of these things, but really I consider myself a macro trader that jumps from thing to thing and whatever's trending. And I really do believe the fact that there's always a bull market somewhere, and I want to ride those trends. So let's start out with a couple of them. So we'll start on slide one. So slide one, and exactly what we're looking here is the gold to the S&P 500. If you look at gold, you see that gold is breaking out of a consolidation pattern and making new 52-week highs, which I circled in blue, and it's continuing higher. And a lot of people had a lot of feelings about this chart. One of those feelings about the chart was, hey, gold is, in a big uptrend, it's been in a big uptrend for a while. Why do you feel like you're such a contrarian saying this? Another one was, gold's probably going to pull back at some point. Why would you tell people to buy gold today? Number one, it's a relative chart. So we're always looking at relative strength here at All Star Charts or against all odds research. Whatever I'm doing, I'm always looking at relative strength. And all this is telling me is that gold is outperforming the S&P 500. It doesn't mean, I hate stocks forever or I think gold's a thing you have to own the rest of your life. I just know the conditions that bring this on. And usually the conditions we see, if you go back to 2000, when this kind of started, the first 52-week high back then was around 2001, 2002, and that continued higher. And the market was under a lot of pressure under that time in the United States. But then the market in the United States bottomed, but where the outperformance was in other areas. But gold, commodities, they really led the way for a good, 6 years basically. So we had a really good run in gold. Gold actually topped out all the way in 2011. It really kind of shook off the great financial crisis. Everything else was down a ton. Gold had a quick liquidity event and then went back up higher. And what I mean by liquidity event is when everybody has to sell something. This happens a lot. So everybody had to sell something. People sold gold, people sold bonds. Everything that was a safe haven is not a safe haven anymore in a crash style liquidity event. So that kind of brings on that type of environment. But gold kind of shook it off, continued higher, continued to outperform the S&P 500, and then other things did as well. And we'll get to those in a second, but that all goes back to the dollar. The dollar is always the biggest thing for me to look at. It's the world's reserve currency. Because it's the world's reserve currency, it's always the most significant macro ticker that you can look at as a trader. If you're not looking at the dollar, you have to look at it. So if you look at this huge trend here, this is a massive downtrend starting, all the way back in the 80s till today. That doesn't mean the dollar hasn't had periods of upside. Obviously, it had a period of upside coming out of the stagflation era in the 70s. This is a period of time where commodities were going crazy. Gold was going crazy. Silver was going crazy for many years. And then next thing you know, they all went flat for about, 10, 15 years, basically until 2000. And so, you see the dollar kind of wipe those off clean. Next thing you know, stocks were the major outperformer for a long time. And then you get to the next peak. The next peak is in 2000. And at this time, the dot-com bubble was going crazy in the late 90s. Basically 95 to 2000, you couldn't make money anywhere but tech stocks. They were the major outperformer. Everything else was dead. The internet was going to change the world. And if you didn't buy internet stocks, you were stupid. Warren Buffett was known for being an idiot and a dinosaur at that time because in 1999, he didn't have any exposure to any of these things. And then comes 2000, we started to see that run in the commodities complex, in gold, in silver, straight down the road. So, we started to see that run that I'm talking about now. And today we're kind of had this big dollar up move that's happened for a while. And now it's kind of moving the other direction. It looks like it may be topping out, heading lower, might continue to head lower. That's to be seen. I really want to see a break of 100 decisively, get below that 199 level on the dollar. I would say we definitely could see the dollar head a lot lower. And that would just give more weight to what we're seeing already, which we've seen a lot of these weak dollar trades kind of pan out this year already. So let's go through a few of them. Lumber here. So a lot of people don't look at lumber, and once again, it's a hard to trade product. It's very liquid compared to most futures products. So, I'm not saying everybody needs to go out and trade lumber contracts, but you need to pay attention to lumber. Lumber tells us a lot about global growth. And the story everybody's telling us right now is that China, these international stocks are moving, but we're not seeing it in any of the fundamentals yet. There's no reason to believe there's actual growth out there. So because they're in China, because we're looking at China and these international stocks, and they're not seeing that, people are going, well, we're not going to see it. Well, lumber is kind of saying something, and it's saying that we will probably see it pick up. This is something that I always look at to kind of look at global growth, see what type of environment we're in. Are we in a risk on, risk off environment? Are we in a global growth environment? And the price always shows up before the fundamentals. And that's something to always keep in mind. This is why, at All Star Charts, we look at the price all the time. It's because we want to front run the fundamentals because that's where the money is made. Usually, when everybody, think about 2022, 2023, everybody thought the market was heading lower. Fundamentals looked terrible. The market looked terrible. And then your first buy signals for the NASDAQ coming in January 2023. And you go, man, I really don't want to own this trade right now. This is the environment's bad, everything's bad, doesn't make any sense. But then the Nasdaq ends up being the best performing sector, or at least out of the big indexes for a long time. And technology was obviously the best performing sector. So once again, it's always try to front run the fundamentals, and the price action lets you do that. The next chart is copper. So as we're looking at copper here, you can see copper made a 52-week high recently. So I've been updating this chart again and again. If you guys have followed me on Twitter, you've seen, copper make a new 52-week high. Back then I updated that. I'm always updating new highs, 100-day highs, 150-day highs, and 200-day highs. Now we're at a 52-week high in copper. That's telling me that this trend in international stocks in China, specifically in South America, these could continue. When we see this type of environment, it's usually very good for international stocks, and it's not good for the dollar. If you see this big move in copper that happened in 2020 into 2021, that was during the weak dollar cycle. When the dollar got very strong, you could see it just kind of topped out and went sideways, and then it started going lower. Now the dollar is weak again. Now copper is moving higher. So everything's connected, and I think that's the biggest thing you have to learn about markets. If you want to be a macro trader and you want to trade everything, everything's connected. This is all kind of one trade to me. I look at China, I'm looking at copper, looking at lumber, and the dollar as kind of one trade at the moment. That doesn't mean you just buy them all. That means you take signals in all of them as they come. And so what do I mean about one trade or just the commodity cycle? So this is a 52-week high indicator on this chart. And you see gold on the top, copper, and then oil. As I talked about earlier, we had the liquidity event that happened in 2008. If you see the blue lines, though, I highlighted when gold hit a new 52-week high. What happens every single time? Copper follows, then oil follows. What we've seen this time is we haven't seen oil follow at all yet. We have seen copper follow. So now we're just kind of sitting on our hands waiting for oil to start following. And that's usually the last one that catches up in the great commodity cycle. It takes, 10 to 14 months is actually the back tested time. So you got to waste some time. It might take a little bit to see this really show up. But now, right about now would be the time that I think oil should start bottoming. Right now, I'm just looking for oil to bottom, reverse higher, maybe to that $80 level. But once we get over 80, I would think oil could go a lot higher. But for now, I wouldn't say, hey, I'm very bullish on oil. You have a short-term trade on it. Just looking for it to hit some more upside here. That's about it. But if it starts to break above 80, get very strong, I could see oil headed a lot higher. But right now, the things you got to be long are gold, copper, and also silver. Silver has this massive cup and handle pattern. And we've talked about it a bunch. I brought it up at the portfolio accelerator. Everybody said, "Yeah, I've seen this chart a million times," and so have I. I'm almost tired of seeing it myself, and it's my chart. Um, but this massive cup and handle pattern can lead to more upside. So the dotted line is basically the highest close that we saw in silver. So we're getting around that zone once again, and also look at the quarterly candles. So these are quarterly candles, very, very long-term candles. And so that quarterly candle is going to close strong this month as long as we stay around this area. Usually that says more upside to come. I think silver targeting somewhere around $50 is something that's very, I think it's a chip shot from here. I think it's easy to hit, basically a free throw. You got it, you can make it. It might take a couple shots if you don't play much, but you'll probably hit it pretty soon. And I do think we're going to hit that point. But I think really to me, more than anything else, more than anything I'm saying today that I have the most conviction on, it's probably silver. Gold miners, if you look at US sectors, the US sectors look terrible. There's nothing that really looks great. Energy is actually up year to date. Um, but gold miners are actually up over 20% year to date. That's significant. That's something that we haven't seen in many years. I think it's something that can absolutely continue. And I think that the best way to pay attention to that is to ride the trend. Everybody's looking for targets. They want silver's going to hit 50. It sounds cool when I say that. But really we have signals going back a while ago. We've been long those signals, and until it breaks trend, and you have to decide how that trend changes for yourself. At the Gold Rush, you can see how we look at trends, and I can help you build your own models, but everybody's time frame is different. Shorter term traders, shorter term swing traders could use a 10-40 crossover system. That's a 10-day moving average and a 40-day moving average system. And when it crosses up, basically the 10 crosses over the 40, you buy. When the 10 crosses below the 40, you sell. And so you could use a system kind of like that to get long these things and kind of ride the trends. Or you could be more longer term. The old turtle trading system is buying a 100-day high and selling a 50-day low. There's a million ways to do this, but back test it, figure it out for yourself, how it works in your time frame and your risk tolerance, because that's something I'll never know from doing a video. But I do think silver getting above 50, if it gets above 50 finally after all this time, I think that's going to be one of the most explosive moves we've seen in the stock market this year. So I think it's going to be very significant. I would continue to watch it. This is a good seasonal period for gold and silver. Usually April, they kind of stall out a little bit. May, June, July, August, you usually see that next run. So if we can get silver to really get up to that $50 level and then break out, there's no reason that can't shoot out to being a double or at least hitting 75 after that. So next chart is junior gold miners versus gold miners. And we haven't seen much in this area lately. We saw a little bit of a move higher. It was actually looking really good at one point last year, and then it kind of rolled over a little bit. The thing you need to know about the GDXJ, which is the index I'm using for junior gold miners, is that it has a lot of silver miners inside of it. And also, you guys, if you guys are asking questions, if you are leaving comments, I'm doing this one by myself, but I promise I will go check out the comments and I will get back to you afterwards. So please leave comments. Please, whatever you can do. I love to hear from you guys. If you guys are at All Star Charts, feel free to write me as well. We love to hear from you guys. But so looking at junior gold miners to gold here, and what I was saying earlier is there's a lot of silver miners in the junior space. And so I would expect here, if silver is going to continue to be an outperformer, that junior gold miners will outperform, that the SIL ETF will outperform, which is SIL. That's an ETF for silver miners. And then SILJ, SILJ, is another ETF for junior silver miners. I would expect those to continue higher if silver is going to continue. And I figure that's going to be where the massive outperformance is. You guys are a lot of people look at gold and they go, maybe I should have just only owned gold all these years because the miners have sucked. You're not wrong. However, there are periods of time where junior miners will outperform everything. They will make you the most money in the market. And I think last year, this year, they've not to mention, they've actually done very well in the last year. Up over 40%, actually up over 50% in SILJ. So just over a year period of time, it's had a much bigger move than the S&P 500. It's been still in an uptrend, and I'm just talking about the ETF. If you look at the individual names, some of them are up 200, 300%. We have some great picks that we've had at the gold rush that are up even more. So I would continue to pay attention to these in this space. This space is going to be where a lot of money is made. One thing you can do if you don't know this, you can look inside of the ETFs and find what you want to trade. So, looking inside GDXJ and saying, okay, these are the ones that are good. Okay, there's a silver miner here that I like. That's what you can do. And like my friend Kashop always says, make sure you're not just buying things that are, all over the world and you don't know that country. Because some of those mining operations can get shut down and you can lose a lot of money. The safest bet, if you don't know the space very well, is stick to North America. And if you can stick to the North American producers, you have a pretty safe bet there. So going to the next chart is just the miners against gold. And you can see here, and my arrow moved as I screenshotted this. Sorry about that, guys. But anyways, you guys get the point, where basically GDXJ looks very similar to, and gold look very similar to gold and silver. So GDXJ is going to be the outperformer at some point. People are not going to want to believe that at the moment, but the percentage gain that we're going to see in GDX will outperform gold at some point. Yes, gold is at 3,000. Yes, gold has had a huge move. I think GDX getting up and over these resistance zones, just like it is starting to do right now, is going to take this thing up at least a double from here. Probably easily. A lot of people are going to say, I don't know, GDX has been lagging for a long time. That's how it goes. Things lag and then they catch up very quickly. I think this is a perfect time to start looking at the gold mining space, not thinking you missed the move because you didn't come all the way back here and buy. Just being ready for the next trade. That's all you can do as a trader. You don't want to go backwards and think about what could have happened or what you should have done. You just want to be ready for the next trade. And so for me, the next trade is silver. I think silver looks great here. I think it is one of the best things to kind of keep an eye on right now. To if you're in the precious metals or the commodity space, silver, platinum even looks great. Great setup there in platinum. Looking to buy it over 1070 or 1100. Those levels are good levels to buy against if you guys are looking at platinum. There's an ETF called PPLT. So you can buy that ETF or you can buy the futures, however you trade it. But all of these are just saying like that space is seeing risk on into it. And as we see risk on into that space, we're seeing money flowing into that space. And that's where money is made. Looking at these risk on environments and saying, okay, we're safe here. We're in an uptrend. We don't need to bet against uptrends. We need to just ride the trends and admit to ourselves we don't know where it can go. When we started buying gold all the way back in, the first trade in gold that we were doing at Against All Odds Research was in 2018. And then, there was the shakeout in 2020. And then we had another great trade in gold. And then it went sideways for a long time. And then the COT positioning got us back long. Probably it was around, I think it was 17 or 1800. I couldn't have told you it was hit 3,000 from there. I don't know that. I don't know the future, but I do know how to ride a trend. And silver is the next trend that's about to pick up and really take off. So the next chart is, speaking about this all being one trade, this is why I even talk about equities. Because I trade everything. Like I said earlier, trade everything. It's all things that are in front of me, ready to trade. Um, all markets for me, because there's a bull market somewhere. And I want to be involved in the best assets. And I also want to be diversified. So if one thing doesn't work, it doesn't kill you, because no trader is right every single time. It's impossible. If you go back and you find famous quotes from Soros, talking about being right about under 40% of the time, talk about Druckenmiller and never saying he'd never been right over 50% of the time. This is just how trading goes. So you want to be diversified. So what are we looking at here? And this is the NASDAQ, which is if the line is going up, we're seeing the Nasdaq outperforming. If the line is going down, we're seeing small caps outperforming. So basically, here what I'm talking about is this a top that we're seeing that's very similar to 2000? And that's what I think the environment that's coming, which wasn't the worst environment for stocks. A lot of people forget that. They just hear about the dot-com crash and think everything was bad. Um, Energy did phenomenal. Micro caps, small caps, bank stocks. A lot of things actually had really good returns during that period of time. And a lot of people don't remember that. Gold miners being the best return during that period of time. Gold miners absolutely went crazy from 2000 to 2011. So that was another one to continue to kind of look at and go, okay, well, this is looking similar. But also, another area that did well was value stocks. And when we're talking about energy stocks, when we're talking about bank stocks, a lot of these things are in the value area. These are companies that control that put out real things. They're not just tech companies. They're not just growth companies. They're not talking about what they're going to be in the future. They just are. And some of them are really boring. I talk about paper stocks, and people are like, "Oh my gosh, why is he talking about paper stocks?" Because they make money. They all go up. If we're technicians and we just look at the charts and we look at and we read what they're saying, what does it matter what you're looking at? If it's going up, you buy it. So all this chart is to say, it isn't to say I don't like technology or I love technology stocks. It's just to say markets are cyclical, and sometimes it's a great time to own growth. We owned semiconductors, the Qs for the last couple of years. It was great returns there. And then sometimes it's not. And I think we could be heading into a period where value starts to outperform again. Energy stocks start to perform well. Financials have been performing very well. Look at Berkshire. So all of these things could start to perform very well going forward. Look at industrials, look at metals and mining. Obviously, gold miners, we've talked about that already, but those are the areas that I think are really going to benefit from this cycle going forward. And also, for me, and I keep pounding the table on this, that I don't care where my returns come from. And I come from a trading background. That's me. I'm happy to be here. I love talking with you guys. I love writing. I absolutely love it. But more than anything, I love to trade. I'm a trader. I worked for big funds. I still have a fund myself. And what my clients want is they just want me to make money. And they usually don't care how I do that. And that doesn't mean, you're doing something wrong. Like if you're investing in, you bought the Chinese ETF, it's not like you're helping China take over the world with your money, unless you're running, a couple $1 trillion. Then I guess we have a different conversation. But I feel like most people watching aren't running trillions of dollars. As normal traders, we're trading in and out of things. What we're doing is enhancing our own lives and our own portfolios. And that's my goal for my clients, is I want them to have a great life and I want their portfolios to make money. That to me is everything. So wherever that has to come, if that comes from I'm buying the United States and we're doing well in technology, it ain't helping anybody to lose money. And that's the thing. It's not helping you. It's not helping anybody to lose money and just hang on and be an investor because you like something so much. So if you look at this, you can kind of see what I'm talking about here. Year to date country performance. Rick helped me make this slide. It's a great slide from Rick today. He's one of our analysts at All Star Charts, great dude. And so if you look at this, you can see that Poland is leading the way year to date, 35%. Underneath that, K-Web is right behind that. So what we're seeing here is the United States is down 3% year to date, and all these countries are up double digits. I mean, you could go down the board; most of them are up double digits. If you're looking at Europe, if you're looking at South America, if you're looking at Asia, most of them are up double digits in a very tough environment for the S&P 500, which is still under the 200-day moving average. So just saying, don't be afraid to rotate into these other areas, whether it's gold miners, whether it's international stocks. Copper looks great. Short some bonds, currencies. Buy buy the New Zealand Kiwi. I could name a million things that we're in. So if you guys know my page, feel free to go to it. We list our trades every week on Wednesdays. You guys can see that, and then you can see what I'm doing. But we're all over the place, and the reason is there's uptrends in all these different areas. Look at the 90-day chart. You're just seeing uptrends over and over again while the United States is falling into a downtrend. These are the areas you want to be in. Even though I do think the S&P 500 possibly bottomed, about 70-30 on that right now, I do think there's better areas to be. And I'd rather my money be traded best in other areas. And I know that the market is cyclical. And if you go back to 2000, like I was talking about, and a lot of people don't go back that far when they study history or look at charts, you'll see that the market's very cyclical and it makes money at different periods of time in different asset classes. Right now could be a great time to buy international. Do I know if this is the one that lasts for 10 years? I don't know. But I know that I want to be in it now. And I know it's making a lot of money now. Trades are good, and I'll keep taking them as they come in. So I want to thank you guys for joining us. Just a couple things real quick. You guys can check us out at All Star Charts. My partner and I, Sam, we try to put out a bunch of good research. We have weekly trades that come out. We cover everything commodities related, and you guys know I can't help myself. So maybe sometimes we get into bonds, sometimes we get into stocks. We cover everything, and all of the stocks inside of the commodity sector. So energy stocks, metals and mining stocks, agricultural stocks. We cover all of them. So we continue to kind of go around all of these areas and really try to teach you guys, what we're doing, show you guys how to make money in these different areas, and just be open to trades coming anywhere else. And also, I'm the guy who writes the bond report. So you guys get some access to that too. And then Sam is always coming out with a commodity report on Friday. So, we got all types of stuff coming your way here at the Gold Rush. And so right now we have a 30-day risk-free offer. If you guys want to check us out, just to see what I'm talking about. Hey, Jason was talking about all these trades and these ideas. Like what's Jason talking about here? So you can see what we're doing. It's a 30-day risk-free offer. Hit us up at All Star Charts. You can call us. You can send us an email, whatever you guys want. Sign up online, allstarcharts.com/goldrush. And you guys can get 30-day risk-free trial. And if you don't like it and you're unhappy, you think I suck at what I do, or you just want to give me some constructive criticism, whatever you guys want. Write us for constructive criticism, get your money back, 30-day risk-free offer, whatever you guys want to do. And we'll see you guys soon. Thank you guys so much for spending this time with me. I think this was a lot of fun. I think we went through some good stuff today. And basically just overall, open your mind to all of the different things out there that you can trade, and don't get stuck in, I got to buy United States only tech stocks. There's a lot of sectors inside the United States that are doing great. There's a lot of commodities that you can buy inside the United States that are doing great. And globally, a lot of things are doing great as well. Take it easy, guys.